Call the meeting to order. Welcome those of us who are here. We do have proxies from Judy Davis and also from Michael Lavender, so we are able to do business. So with that said, you've had an opportunity to look at the agenda. Anybody want to add anything to the agenda or delete it or have anything to say about the agenda?
Mr. Chair, I think there's 6 or 7 more items we need to add to the agenda. I'm just kidding.
Thank you, Mr. Chairman.
You know, give a second on that. Not, I would welcome a motion to approve the agenda as it is.
So moved. Second.
All in favor say aye.
Aye.
There's 3 of us. You have before you also in your packet was the October 24th minutes of the meeting that we held on that particular day. Hope you've had an opportunity to read those. Any corrections or additions or deletions to those minutes? Not, I would welcome a motion to approve the minutes.
Move to be approved, Mr. Chairman.
I'll second that motion.
Second, any discussion? If not, all in favor say aye.
Aye.
Approved, no. Disapprove, no. Everybody?
That's Tracy's.
I know what Tracy is.
All right. Yes, sir.
I'm going to get you to introduce your, uno momento, sir. Fourth item on the agenda is the October 2013 financial reports. And before we do that, I'm going to ask Brian to introduce our new chief counsel right here and give us a little background of her.
All right, I'm sure she's prepared a short speech to address the Finance Committee today. Tracy Hayes is our new general counsel, and Tracy has a marvelous background. She worked for some number of years in the Attorney General's office and was the Medicaid specialist, worked very closely with Tara in particular, so is very well versed in these arcane areas of healthcare law, especially pertaining to Medicaid and the general statute, and then worked for Alliance when ECA was up in Wake, and as of the first week in December has been here with Smoky. She's just a tremendous addition to our team.
Sounds like it. Welcome to our finance committee meeting.
She's already proven herself very helpful.
Sure.
I followed my husband out here. He is at UNC Asheville, so we're really excited to be out
Well,
there.
that worked out really good, didn't it? Wonderful. Glad to have you with us. Welcome you back anytime you with us. Okay, the October 2013 financial reports. Ms. Lisa, I'll just go straight to you.
Thank you. I'm going to talk about the balance sheet at October 31st, 2013. Balance we had in our main checking account was $37.5 million at the end of October. And that's up about $7.3 million from the prior month. The main reason there's an increase in that is just as a reminder, starting October 1st, of course, we started managing the 8 counties of the previous Western Highlands region. So any activity starting 10/1, for example, for our Medicaid waiver PM started coming to Smoky. So that's the main increase in the cash account. The risk reserve is up to $3.5 million for Medicaid, and that's an increase of about $446,000 a month. Usually it's been about $225,000 a month. Again, that's related to the Medicaid funding now coming from the new counties. The accounts receivable at the end of October was $6.2 million. The majority of that is from DMH. I was on a call today. They've now released October and November payments. October were released a couple of weeks ago. November's been released, and they indicated that December was close to being released. So they seem to have gotten a little more caught up in the last month or so. The accounts receivable on the Medicaid waiver, we've been showing a little over $500,000 for the last several months, and we have not adjusted that because we still can't get an accurate count from the NC track system and who we're being paid on as far as the individual consumer. So we weren't adjusting that account, but we adjusted it this time as part of the PM, that should have come to Smoky to Western. So that will be paid to Smoky from Western, because it was on eligibility for October and after. So that's why that number's going down. We still will adjust that number further when we can get an accurate 820 from the PNC track system. So at the end of October, the current assets were $51.2 million. In the liabilities, the majority of this increase is related to Western, because now we've also got an IBNR for October for the new account. So in accounts payables, we've got $5.6 million. In the state IBNR, we've got $1.3. Previously, for Smoky on the state IBNR, we only had about $300,000, because I think we pay a lot of the state providers on a 1/12 basis. And in Western Highlands area, they have not done it quite at the level that Smoky does it for their comprehensive providers. So that's why there's a large jump in the state IBNR. In the Medicaid IBNR, it's $14.2 million. Again, in the Smoky area, usually it was around somewhere between $6 to $7 million, depending on the month and what had been billed. Again, what we've estimated to be outstanding for Medicaid at the end of October is $14.2 million. So the total liabilities at the end of October are $21.9 million. Fund balance, really no changes there. The non-spendable prepaids has gone down a little bit. And then, of course, the current year changes as the net income either increases or decreases each month. So the fund balance at the end of October is a little over $29 million. Just as a reminder, this balance sheet, which we talked about quite a bit last month, is on the modified accrual basis, and that's what y'all are more accustomed to getting. The next printout is a balance sheet on the full accrual, and when we processed this last month, y'all had asked for this to be included, and this is the one that we send monthly to DMA. I think we had talked about maybe not reviewing this one in detail. It contains the same information, but there are probably 4 or 5 different accounting transactions that are accounted for differently on the modified versus accrual. So if you try to tie certain numbers back, they don't tie back exactly. So I don't know if you want to, I think we talked about last month not processing the one on the full accrual, but it's in there for informational only. If you look at it and have any questions.
Anybody have any questions regarding that?
All right, if there are any questions on the balance sheet, I'm going to go to the yellow copy, which is the analysis of revenues and expenditures. This is for July through October 31st. And I'm on the box on the left. The Medicaid, the service revenue. You can see about 5 columns over our total Medicaid service revenue for July through October is $47,198,000. That's slightly understated. Again, we don't know by how much, because we don't know exactly the consumers. We haven't been paid for yet because of not being able to get a consumer list from NC Tracks. On our service expense in the Medicaid fee, we've got $29.4 million of service expense, and that includes the IBNR. So we have a surplus in Medicaid fee of $2 million through the 4 months. If you look above that, you'll see the behavioral health long-term residential. We utilized $3.2 million, outpatient $3.8, and ICFMR is $9.8 million. So you can tell by just glancing at that, the majority of the Medicaid fee dollars are going to fund ICFMR services. Medicaid C, which is also called Innovations, it used to be called CAPMR, service revenue is $14.8 million. The service expense is $15.3 million, so we have a deficit in innovations of $520,000. Again, I don't think it's really quite that high once we are able to determine accurately the eligibles we have been paid for in the innovations group. Medicaid B3, we've got a surplus of $794,000, and we've been reviewing that internally in service management and have a plan to expand Medicaid B3 services. So in total for Medicaid, through 4 months, we have service revenue of $47.2 million, service expense of $44.9 million, and a surplus of $2.2 million. The administrative revenue for Medicaid is $6.9 million. About 80% of that funds salary and fringes, of course, because those are the functions that we're performing through the staff. So we have a surplus in admin of 1.4 million in Medicaid for an overall Medicaid surplus of 3.7 million. Also, again, in the risk reserve this year, the funding is 1.1 million. And as a reminder, these Medicaid numbers include 1 month of the expanded 8 counts. In the middle of the page on the state and federal, the service revenue is $10,892,000 from the state year to date. We've expended right at $9.5 million, so there's a service surplus of $1.4 million. On the administrative revenue from the state, we've received $1.2 million. Our expenses are $1.1 million, so we've got a $69,000 surplus in admin on the state side through October. The far right column, I just want to highlight a couple of numbers. Our total service revenue year to date is $58.9 million. We've expended $55.4 million, so that's about 94% that we've used of our dollars. Again, we try to target no lower than 90% and no more than 100% utilization. On the administrative side, in total, our surplus on the administrative side is $1.6 million. I think that's a little high right now. We have a lot of one-time capital needs that may not be factored in yet, so I don't think that'll stay quite at that level as we go through the year. Again, overall, our net operating surplus through October is a little over $5 million. Are there any questions on any of the revenues, expenses, or any comments? Okay, Ed, I'm going to go to the next report. It's a little bit of a financial packet, if you don't mind, and then we just need to have a motion to accept these. The next handout's the one that says Medicaid budget actual through October 2013. I'm just going to focus on the two far right columns. The one that says July through October 2013 is the service revenue that we have received. Actually, it's our budgeted service expense based on the PMP, so it's the budgeted service expense. The column before that, July through October, shows what we've expended, and again, that includes what we've estimated. So if we just use the first line of outpatient services, July through October, service expense, $3,845,000. Based on how Mercer projected we would utilize it, they have $4.5 million, so we're under $729,000 on outpatient services. Those that are kind of shaded in that yellow color are the ones where we're trending over and are over year to date, again, based on how Mercer projected we would utilize the dollars. Community service, behavioral health long-term, ACT service, and MST are over, and they're over very little at this point. We also have our clinical staff who have developed a service budget on how they want the services to be carried out. By next month's meeting, I'll add that on and we can show how we plan to use it based on how Mercer plans and then what the variance is in that for the actual year to date. I think that would help too, because based on how Mercer projected is not necessarily how we're trying to model the services in the area. So we'll go over that next month, and I'll bring that data also.
How often does Mercer come back and redo their estimates?
Remember
Well,
that?
that's a good question.
Remember that conversation we had upstairs earlier today? Typically, it's on an annual basis, but they also have the ability to essentially open the contract and the rates to reestablish them. And in fact, they did that with us for rates for, we're on because we went live July. So we're, July to July, we'll have a new rate effective January 1st because of some changes that they are making, which is actually a reduction.
I guess I was naive and thought they'd do it once a year, but if I'm not mistaken, and I think I remember because we just looked at it, we've been at the waiver now, this is the 18th month, and I believe we've gotten 5 rate changes in 18 months. That's my recollection from what we just reviewed, so. And I think one of the it's an increase or a decrease, it takes a little while to adjust your service. I mean, you've already authorized out, so it takes a while, I think, to adjust to the rates.
That's interesting. I didn't know that. So you're
I'm
counting
sure it has. I'm counting the one that's effective
January 1st.
because they've already sent that. And I'm also talking about the one, the very first one we got. And then we got one in the first year.
The DOJ.
Renewal, yeah, the DOJ was in February, the renewal.
The D3.
When they reset the rate, is it retroactive back before, right then?
It's not retroactive.
Okay.
That is one of the things they do differently than the Division of Mental Health, who frequently goes back.
And Mercer's the only one who does rate adjustments.
Mercer does the calculations for the state, and they're a vendor for the state that they contract with, and Mercer does the calculations for each catchment area to determine what they think the rate should be, and then DMA comes to
So
the,
the state has a contract with them to do this,
yes.
and do you know how often does that contract up for renewal?
It's actually changed. I think they're now only going to be using Mercer for the actuarial work.
Yes.
The one piece I'd add to what Tracy's explaining is Mercer is then responsible for certifying the actuarial validation of these rates. It can't just be somebody says this is okay. There's there's a certification process.
The federal regulations for managed care and Medicaid require that they be actuarially certified.
Okay.
Just the last thing I want
Go ahead.
just want to highlight the last line that says total Medicaid waiver. We've got a $3 million surplus through October, and again, we're utilizing about 94% of the service dollars year to date. And Mr. Finance Chair, I would give a motion to accept the financial reports before we do the dashboards.
Do I hear a motion to accept the financial reports as they were presented? Have a motion, a second?
Second.
I have a second. Any other discussion? Not all in favor of approving these as read, please vote by saying yes.
Yes.
Opposed, no. Keep on keeping on.
Okay, I'm going to go through these a little quicker than normal, just because we have the audit reports down, make sure we've got adequate time to have the audits. And the first dashboard, the medical expense ratio for Medicaid, again, you can see our target's no lower than 90% utilization, so we want to stay between 90 and 100, and you can see the green line shows July through October. It varies, but it's somewhere between about 92 to 96 or so % each month, so we're well within the targeted range. On the state funds right now, we're below the 90%, and we're working with their service management cross-functional team to address the use of those service dollars. On the back of that page are just a couple other medical expense ratios. One's on our other local funded, and it's well over the target. And I believe, and I think we talked about this last month, we need to realign this, if I'm not mistaken, it's over because we have the legal fees in there and we have the fund balance. So I think that's why it's over. I need to really make a note to go back and correct that, because that's really non-service, and I think that that's a little misleading when we look at this. The total administration, that also fluctuates a little because of one-time costs for staff turnover, but we're still around 85 to 90% on the administrative dollar utilization. On the next page is the Medicaid current ratio and their total current ratio, and what that's really measuring is current assets to the current liabilities. This is really important because part of Senate Bill 208, we have to maintain a certain current ratio. So the Medicaid current ratio is well over 1, and the total current ratio on the slide below is somewhere between 2.4 and 2.7. It dipped down in October, and I started thinking about that and what's really changed, and we haven't transferred the assets and liabilities, any of the balance sheet accounts over from Westford yet, because we done the merger. But what happened in October is the cash from the new 8 counties and the PM and the liability for the IDNR came over to our books. And the PM should cover 1 month of service, so that's kind of like a 1-to-1 match. You know, that's a 1-to-1 ratio, and that's really all that's come to us at this point. Once Western's officially closed and we're merged, this should go back up. But that's the reason for the drop in October. Are there any questions about that, about the current ratio? Does that make sense? The next graph just shows our Medicaid paid claims year-to-date, and this reflects the budget versus the actual. And some of the information we just went over, but this is just the graph of that same information. The blue bar is our budget, and the burgundy or purple bar is our actual. So if you look at the far right, you can see that innovations is over the budget. And you can also quickly see the amount of percentage of dollars used for innovations and ICF and that compared to all the other services. I'm going to go to the next graph if there were any questions on that one. The next one shows our service revenue and expense by aid category. And as we've talked about here a number of times, we get funded in 6 different aid categories. So one of the things we do is measure the revenue for that aid category against the service expense for that aid category. The blue bar is the revenue and the purple is the expense. So you can see on 3 categories we are spending more for services than being reimbursed. The age category, foster children, and innovations. And again, some of the revenue will get increased some by us adding the receivable and revenue when we can identify consumers we have not yet been paid for. Without the details of the consumers we've been paid for, it's hard really to make sure we have the revenue lined up correctly.
You know,
And
first
I don't
one,
want to beat that dead, but that's just the reality right now in some tracks.
and of course, we don't manage by these categories. It's a financial reflection of the way the money comes to us.
Yeah, and I think at some point it may help us in some argument back to DMA potentially.
Just an area where things were miscalculated. I mean, this would be an eligibility issue.
Yeah, because if the eligibility shifts right in one category too, based on how they projected, depending on when you get paid for that category, it could really impact your revenue cost. The next slide is the budgeted revenue versus the actual revenue. And this is by the Medicaid BC and B3, and this is what we kind of went over on the revenue and expense analysis. But in total, on the far right, you can see our Medicaid revenue budgeted is $48 million, and actual is $47.2. Again, our revenue is understated because of the unknown eligibles and identifying who they are. On the back of that is the budget versus actual for all of our revenue streams. And just looking at the far right, in total for all revenue streams, including the state, we are also still slightly over budget. About, say slightly, it's 1.5 million. Percentage-wise, it's slight. Sounds like a lot of money if it's mine, but it's 1.5 million at this point.
It's not yours, Lisa.
Right.
Just let that be made clear.
That's why I can just say it and move right on. Yeah, if I had that much, I probably would be somewhere else today also. The next slide is on the Medicaid services by service category. And again, this just shows the percentages, so you can quickly look and see where the majority of the funds go, what category of service they're being spent for. Again, these are the category of services. The innovations and ICFMR is about 56% usage of the service dollars, July through October. And then the last slide is the Medicaid service expense by the category of aid. Again, the innovations of that. I know that was quick. I know you're also familiar with these as we cover them every time, but are there any questions or comments or concerns about the information?
Make a motion to approve all reports as presented.
Just for the sake of discussion, I know we don't want to spend a lot of time on this, but one of the issues is that in the new kind of Medicaid plan going forward, whether or not ICFMR would be part of our capitation in the plan that we would manage, and you can see by the slice of the pie what a big financial difference that would be.
Any other discussion? Not, all in favor? Say aye. Opposed, no? Item 6, then, Lisa, with your audit presentation.
Okay, and I'm pleased to introduce Mr. Wayne Terry. He's from Clifton Larson Allen, and I know y'all remember previous to this audit, we used another CPA group for 6 or 7 years, and we did an RFP last year, and the board approved going with Clifton Larson Allen, and part of that reason was just their experience with auditing other MCOs that had been under waiver for a while, so they also have a lot of Medicaid and healthcare expertise, so we were pleased to be able to use them this year. So,
Who didn't get a copy? I know a couple people came in after that. Should be 2 packages. One is audit, at least I had, and the other one is the board package. Anyway, I'm Wayne Terry, Clifton Larson Allen. My other partner, Jeremy Hicks, will be here for the full board meeting. He's going to do part of that presentation. I'll try to be brief, but I'll also try to address any questions that you have. The first page of the blue packet, board packet, that's where I'm going to start. That's got the highlights. Jeremy will basically take care of that first page, which is our required auditor communications related to the audit process itself. He'll go over that. However, on the second page, I do want to point to this. We had no audit adjustments except for 3 client-prepared adjustments, which one was to record settlement for single-stream funding of $720,000. The other 2 adjustments were basically to reclassify fund balance categories after everything is sort of settled out into the proper buckets. We had no disagreements with management regarding accounting and reporting matters. No significant difficulties in the audit. Management provided us a representation letter at the end of the audit. We didn't have any other consultation with other independent accountants, and no particular issues discussed prior to retention. No other findings or issues related or communicated with management. We did not have any audit findings whatsoever related to single audit compliance or other areas. On page B1, this is the format of the way everything is laid out. The audit report starts with the audit opinion, then management's discussion and analysis, the statement of net position on the accrual basis, statement of revenues, expenses, and changes in net position on the accrual basis, the statement of cash flows, the notes to the statements, the other information related to post-employment benefits, then there's balance sheet, income statement, fund balance, and all 3 of those are on the modified accrual basis to meet the state statute requirements, and then the single audit section. This year is the first year of the change in the report model. Back in November last year, about almost a year ago, when DMA started this reporting packet, they wanted it on a full accrual basis, so it really made more sense to go ahead and convert everything to full accrual versus the old GASB 34 model, where you had a modified accrual set of statements, and then a really hybrid full accrual conversion that was in that process too. Everything in this report is based on full accrual accounting, except for the middle section in there where we still had to do modified accrual with budgetary comparison to comply with state statute. But all of that was discussed by the LLC, the auditors, the other LMEs, MCOs, and the DMA before they made that change. The audit opinion on the financial statements is unmodified. That's a new term, which is going to take me forever to get used to because I've been using unqualified for 35, 36 years. So they finally changed it. Everybody's got to have a new buzzword. But this is still the highest level of assurance on financial statements. The statement of net position indicates continued improvement in your financial position. Your unrestricted cash balances at year end equated to 73 days of operations based on 2013 operating expenses, 99 days in 2012, so it's down somewhat. You're into the first full year of labor in 2013, so that ain't back into that as you grow. Unrestricted net position was almost $17,500,000, which is about 11.7% of the operating expenses for 2013. That also was down a little bit with that percentage from 2012. Net AR, accounts receivable included in cash, there's approximately 78 days of operating cash and receivables payable to any obligations. At the end of June, the state was pretty much up to date. I see they're dragging in, which is not unusual. Net revenues were over budget on the modified accrual budget basis. Revenues increased by $111 million, 252% from the prior year. Expenditures increased by about $102,000, 209% in 2012. You had an excess of revenues over expenditures of $5.9 million. You also administered almost $35 million of state and federal assistance during 2013. That was about a $3.4 million increase from the prior year. As I said, there were no material instances of any non-compliance with laws or regulations. No findings related to documentation in the medical records. No material weaknesses in internal control of the financial report. Our general recommendations are just verbal, and that's just to continue looking at all areas of internal control as the LME MCO model continues to evolve in North Carolina. And we certainly want to mention our appreciation for assistance with Lisa, Will, John, and all the staff for helping us get through the audit. Always a few bumps in the first year, and we won't talk about this.
We made it by the deadline. Last day, right?
We were going at it pretty hot and heavy on the internet there for a couple of days. Not really any other issues in there. I know Lisa wanted me to address possibly the issue that happened after the audit with the, what you call it, the fraud. It's fairly small. I'm saying a little bit larger. That's really as technology expands. I look at this when I talk to several other people, CPAs in our firm, tell them what happened. It's like, we didn't talk about that. But it's always a way somebody can trick the system. But it goes back to that breakdown. You know, let one employee institute a transaction, consummate it, etc. So it's back to the old basic rules of segregation of duties. And that's what happened. But he figured out a way to get around this where the paper trail looked great. But as I'm looking at right now, just thinking about some old ones when the ATM machines came in, it didn't take 3 months before somebody figured out how to scam that thing. And that was the first fraud I ran into back in 1979. Plus, I'm still trying to figure out my credit card target the other day. I don't. I hope it hasn't been, but I did make a purchase in the time. There's some in the accounting trends, there's three things in here that you may want to take note of. Healthcare audit, accounting guys, we still follow that. This is a governmental audit. We have to blend both GASB and FASB and AICPA standards together. GASB 68 is coming about in about 2 years, and that will be some additional disclosures. Probably it's nothing really significant for your organization. It's more because of what you're on at the time. So the state will be dealing with most of that. GASB 69 relates to government combinations and disposals. That was not in effect until years after 12, 15, 13. That will impact what you're doing with Western Highlands. It's not a rocket science thing. It just didn't create hostile takeovers or complicated accounting transactions to make that very difficult. Although the LGC does have some required disclosures in those statements when a merger takes place. They want to be able to track what happened in that prior organization and everything transfer over. So last year we had several mergers. We had to provide some additional statements. The one that is not in here, and we discussed a little bit at the accounting and audit update we did for North Carolina, NC Tide, related to leases. The FASB is changing their rules to where they will start treating all leases, whether it's an operating lease or a capital lease, as a capital lease, which effectively is treated like debt. So you will have an asset on your balance sheet and a liability for that remaining lease obligation as it goes along. Sooner or later, and I think it'll be very soon before GASB picks up on that same piece, so there will be some changes going on probably in the next couple of years. Do you want me to go into detail at all in the statements? Hit sort of the high spots.
Are you going to do this at the board meeting in detail, Lisa, or what's your name?
We do need to present it obviously to the full board, but we weren't going to go into more detail in the full board here. We were going to go into more detail in the finance committee since we review all the financials monthly in detail here and at just a higher level.
What's the pleasure, board members here? You want to hear some more detail?
Want to get these statements?
Yep.
All right. Just starting off, and you can follow the table of contents to the layout. Their audit report is on the first 2-3 pages. That used to be a one-page item, and it runs over into 3. But again, that is the unmodified opinion. We expanded that this year into several paragraphs because of the changes in the Financial Accounting Standards Board. The next section is MD&A. This is basically the leases capsule analysis of what happened in the financials. This is a lot less detailed than was in the past because we don't have that one full accrual sub-statements to deal with, where in the past there was information in both a modified accrual and full. I'll go to the full sub-statements before I give you the numbers. So
What page are you
going through page 9, 10 through page 10, that's the MD&A section. On page 13 is the full accrual statement of net position, which is the balance sheet. Total current assets were $32,407,000. $30 million of that was unrestricted cash and cash equivalents. Non-current assets consisted of fixed assets, net of depreciation, plus the restricted cash and Medicaid risk reserve account. Total assets, $36 million. Again, with full accrual, you include fixed assets. You also depreciate those assets, so there's accumulated depreciation deducted against that. With full accrual, you do not include fixed assets, you just include the expenditure of the capital addition as it's made. On the liability side, accounts payable and other current liabilities, $3.7 million. Your liability for IBNR claims incurred not reported, $8.1 million. The current portion estimate of compensated accrued vacation, $225. Other post-employment benefits, that's that actuarial study for commitments you have made to employees to pay health insurance after retirement. Compensated absence, the long-term portion is $566,000. Included in that, which would not be in the modified accrual side of it, is the compensated absence piece and the other post-employment benefits, because they're treated on the cash pay-as-you-go system. Net assets, which is your equity, invested in net and capital assets, net of related debt. Obviously, there's no debt on that, so that is capital assets less accumulated depreciation. Stabilization of state statute, that's required by the state laws, and it effectively is the same thing as accounts receivable. That's the amount that you cannot appropriate for modified accrual budget. Medicaid risk reserve, that is restricted cash by the Medicaid waiver. That has to stay intact until you reach that cap level, and that it probably will change it as less than how it's been in here. Unrestricted is everything except those three items. That includes any board committed or assigned fund balances that would show up on the modified accrual basis. The next page is your income statement. Total revenues almost $156 million. $125 million of that is Medicaid. The state was almost $29 million. So those two items made up the bulk of the revenue sources. Expenses, $150 million. Contract expenses, grants pass-throughs, consisted of about $133 million. Personnel was your next biggest item, $13.5 million. So you had $5.7 million of net operating revenue. You did have a gain on the sale of some capital assets and some interest income, total of $177 million. Your net increase in your full accrual net position was $5,911,000, which added to your previous balance from last year on full accrual basis of $17 million. So you got $23 million fund balance in total. Statement of cash flows, without going into a lot of detail, that's just what your sources of cash were, how you used your cash, and reconcile the beginning and end of cash. That's new because that was not required in the old GAAP for 34 full accrual statements. The changes in accounting policies, that does relate to the method of accounting on modified accrual, full accruals, on page 16 and 17. Then there's more detail following that on each individual group of accounts. A couple of items in there. Detail on your capital assets on page 23. That's the cost, historical cost of capital assets less depreciation. So that detail is right there. We're still carrying that new market property on there as listed for sale, so that depreciation has been taken at this point. Page 24, that's the composition of all of those accounts payables to vendors, $2.6 million, accrued wages, $1.1 million, biggest item is IBNR, it's a little over $8 million. More detail on your account or your retirement plan, obligations, and OPEB. Page page 28 is a calculation of how that OPEB obligation is computed. That was done by Stanley, the actuarial group that does that actuarial report. So it will be a new one required this year, so that will encompass what happens with Western Islands also. We did note on page 31 that you have been working under a management agreement on Western Islands, and that the merger will take place on October 1st. The next section, this is required information from the actuary on those other post-employment benefits. Page 35 starts the beginning of the supplemental information that the LGC required because of state statute. This is your modified accrual balance sheet. On a modified accrual basis, you have a fund balance of almost $22 million. The restricted by state statute is the same as full accrual. Medicaid risk reserve is the same. However, you do have $4.9 million of committed fund balance that is in detail on page 39. The only difference there is the non-expendable report part required in the modified accrual, which is your prepaid expenses. On a modified accrual basis, you budgeted $156.6 million in revenues. Your actual revenues were $156.1. Your expenditures were budgeted $157. Your actual expenses were $149,459,000. You had almost a $6.7 million increase in net assets or fund balance on the modified accrual basis versus the 5.9 on full accrual basis. That change, there's differences, are reconciled on page 38. So you start with the modified accrual fund balance and those individual components of what makes up the differences to get you back to that full accrual change of 5.9 million. Again, the committed fund balances of 4.9 are listed there. The biggest two items are 1.9 for administrative offices, 1.6 for Medicaid waiver, and you've got a risk retention reserve of 500,000, legal actions 270, annual leave payout 325,000, and committed for unemployment compensation 250,000. The next piece, and this is blended into the full accrual statements, is the internal service fund that deals with your health insurance. This is the list of transactions and balances. You had unrestricted net assets of almost $1 million. Your only liabilities were $19,000 in claims paid. And I think there's been some actual talk about that.
Yeah, this actually ended June 30, 12, and this year was paying the run out of the claims. We're no longer self-funded, now it's a self-funded.
So all the balance will transfer into the general fund. The next several pages relates to compliance with the Single Audit Act, the governmental and state and federal grants. Again, there were no findings, no negative comments on that. Major programs are listed, all the compliance requirements. And then on page 49 is a detail of those grants. Federal grants were $1,599,000, which included the Shelter Plus Care Program, community-based program, mental health block grant, substance abuse block grant, and then state funding, which the biggest item there is single stream funding, almost $31 million. Page 50 is the pass-throughs to the providers of those federal grants, listing there. We pass through a little over $13 million
57 is the one really where it shows we don't have any material weaknesses, no out of compliance costs, et cetera, et cetera. So we're good.
Check clear.
Check cleared, yeah.
Sorry.
I hold my breath on medical records every year because that's the one that always wants to bite you because there's so many items, so many opportunities just to miss one little item in there. But, you know, obviously we can't test 100% of them. Our testing percentage is small, but it's not uncommon to find one or two in there.
I understand Lisa going back to that page.
Just want to make sure you
Yeah.
You're good. Yeah. We went together with it. Do we want to take action on that now? As a motion?
It wouldn't be a bad idea. Robert Rules said you can make a motion out of the committee to the board.
Said Robert. Did you see you second that?
I second that.
Okay. Any other questions of this gentleman to explain or anything else about this particular subject or this audit? If not, all in favor, say aye.
Aye.
All opposed, no. Wonderful. Thank you very much for your presentation. Now, you're going to do the same one at
I can condense it a little bit. My partner, another part of Jeremy, he'll probably do the first half.
Okay. Very good. Item 7, the new market property. I'm assuming you're going to do that. Mr. Ingram?
I can, I don't have the details, Lisa might. This is the, let's recap here. We sold one. Remember, we split that into two parcels, if you will. And we sold one, and we have one that is still left for sale. And I think I saw an email from Nathan last night. We changed real estate companies. He thought there was some, yeah.
I think because the individual we used went to a different company.
Okay.
That was the way I
Okay.
understood it.
Okay. We had some interest that he thought was going to yield an offer, and it looks like that's not going to happen now. And Lisa, if you know something different than me, please correct me.
I don't think it said that it wasn't going to yield an offer. I think initially the individual wanted to close something by the end of the year, and now it looks like they're still interested, but don't
Okay.
have that end of the year.
They're not chomping at the bit.
Right.
So,
Who is representing us on that? Is Patty Turner still doing
I believe it's Patty Turner, but she's in the village something now.
that? Okay,
Well, I probably have it.
okay.
so and I'm sorry, I never connected back with you guys here. Okay, here's a good, all right, thank you. Here's the whole rundown on this. I asked Lisa and Tracy to just go back and check and see, because the board made a resolution about the price range that we could sell it in, and he gave, I guess, me the liberty to operate within that range. And then we were wondering whether or not this offer was going to be in that range. And to be honest with you, I've lost the trail here the last 2 or 3 days.
Yeah, I never saw the offer, so I don't know.
And I guess there,
I don't know that there officially was one,
Right.
but
right.
I think based on the research Nathan has done and what comparable properties are selling for, he thought would probably need to be lower.
Right.
It is my understanding.
Right. So even though it doesn't look like we're going to have some kind of rush offer to make a deal by the end of the year, he still believes that the range that you gave us is too high. Is that what it boils down to?
Yes.
Okay.
Is that
So,
Patty saying that, or?
Yes, that's Nathan working with
Okay,
Patty.
I think he's looking for us to set a bottom dollar range of 250,000. Would be the lowest.
okay. And we do that by, was there a resolution when we did this originally by the full board?
since Patty's gone over to a new, realtor or a new position or company, why don't we give her a chance, say, for the next month, let's see where she is at the end of January. And, then perhaps we would take some action. That if she's got one in the hand that's interested, let's ride it another month. I'm not seeing a reason to jump right now necessarily, but whatever.
I think,
It's just my
you know, again,
two
it's
cents.
not, I don't even know that we're not gonna change what we would list it for. It's just what we'd sell
What you
it
would
for.
sell it for.
Okay, nobody's gonna know that.
Yeah.
So nothing changes to the rest of the world, it's just anticipation that we're probably gonna have to go lower than what we thought. And that's all I know about it, you know, just
Yeah.
going on what she says.
And I think maybe the urgency has gone now
Right.
since the individual's not going to home for by the end of December.
Would you need to set the list price closer to what you're gonna accept, though, to make it more attractive for some people?
Sure. I mean, you know how this stuff is, sometimes, you know, you change the price just so it's, comes back looking new, you know, kind of goes to the top of the list on an offering, I mean, but, you know, people are not beating our door down on this, you know, so.
So it's listed at 345.
Yep.
So you were saying just wait another month? or-
That was just my suggestion. I don't offer that in the way of a motion or anything, just, did Nathan seem to think that reducing it or rock bottom price that we should come near moving it right now, or what? Where is it?
Well, let me just say all of this again. There was someone interested that for whatever reason, the belief was they were gonna try to get something done by the end of the year.
Yeah.
It does now not appear that that's going to be the case. So there was
That
special
don't mean that they
interest.
backed out or anything.
That's correct. There was heightened awareness that we may need to get something done in this board meeting in case it was going to be an offer lower. I think regardless of that, what I'm reading here is that we may have to go lower. You know, regardless of whether it's going to be this person or somebody else, that it's just, you know, the comparables. So that's what I can tell you. And again, you know, we're going to sell it for as much as we can.
So Brian, just clarification on my end, are you asking that we go ahead and try to approve a lower price now or not, because we don't have the offer that we thought was going to happen?
Well, it seems if we believe Nathan and Patty, then we should probably just go and lower it. You know? Or we can, or not, and we can just wait and see what we get, and then we'd have to come back to the board and just get it done at that time. Again, to the rest of the world, nobody's gonna know anything.
So all you're really asking for is a bottom dollar price.
That's what he's, if you read that first paragraph there, that's his recommendation.
That seems okay to me. I mean, that doesn't mean I'll take it. I mean, if you got to get more for it, you can get more for it.
It would be a motion essentially to give Brian the authority to sell the property for this price as the floor.
Just changing the range from what we had before.
Makes no difference to me, really. I do know Patty, I know her quite well, I was involved in buying the property. And, she's a very capable person. If you think that it would help in any way, I'm all right with, you know, giving you another figure here. What figure did Did you have the nice?
I go with what he says, so.
250 was what?
250.
Yeah.
250.
I'll make a motion.
You make a motion?
I'll second.
Okay,
Okay.
got a motion and a second. And, any other discussion?
It'll be our little secret.
All in favor of that, say aye. Opposed, no.
Okay.
We'll go for it, see what you get. Travel reimbursement.
Okay, we have, our travel policy is a board approved policy, and we made a few minor changes in some of the grammar, but really what's changing this is in number 19, effective January 1st, 2014. We always follow the IRS standard mileage rate, and it is decreasing to 56 cents per mile. Currently, it's at 56 and a half cent, and it's going down a half a cent January 1st. So we want to update our policy to reflect that. So that's the only change, but it is a board approved policy, so we need approval for the policy, please, so we can recommend it to the full board.
I'll make a motion.
Second.
There's a second Ed already.
Got a motion, got a second? Any other discussion? Hearing none, all in favor of this, say aye. Opposed, no. Go for it.
Okay, the last report is the first quarter fiscal monitoring report that goes to DMH. And DMH has a new workbook of financial reports, and my understanding is, yay, this will be the last time we have to do this quarterly report. So if that's the case, this will be the last one, and it's informational only, but it has required to be presented to the board. So this is for the September 30th quarter. So one of the areas I want to highlight on here that usually comes up shows all the county appropriations, and this does include ABC funds if we get that from individual counties. So just want to highlight what's on there for the counties. Also in the far right column on the county funds, we've realized 93% year to date. Our total revenue overall realized 101% year to date compared to budget. And our total expenditures year to date are 92.3% of our budget. Based on the way we're required to report to DMH, our fund balance unrestricted shows 9.7% for this report, for the DMH report. So again, it's informational only, and I'll be glad to address any questions if you have any about this report.
That's the last one.
It's supposed to be the last one. According to DMH, they're going to get this data from various reports.
I got any questions on this?
Any questions?
No questions?
Okay.
Questions? You need any action on that?
Let's do, please, since it's a required board report. I think we should.
Motion to approve the reports.
Second.
Thank you.
Any other discussion? No discussion, all in favor say aye. Opposed, no. All right.
Motion to adjourn.
She said, we'll adjourn on that. I guess we just want to sit here until somebody says.
Harvey's giving you a hint there.
I hear you, man.
Adjourn. Motion to adjourn. Second.
All in favor say aye.
I was waiting on Rick's 10 new items.
Yeah, I was waiting for it also.